Hello friends, this is Dr. Shashi Agarwal. I welcome you all for the channel Shashi Agarwal Economics and Law classes. So today our topic is very important, which has 100% chance of coming in the examination, the law of diminishing marginal utility. If you find my video useful, please do like it, share it, and also subscribe my channel Shashi Agarwal Economics and Law classes. This topic is relevant for the student of BA Economics, BBA, BCOM, MBA, and MCOM, and also relevant for many competitive exams. So this is my app, Adusam app, which you could download from the Google Play Store. This app provides free study material, free mock test to the student of commerce, economics, and management students. It also offers many structured courses at a very nominal rate: managerial economics, microeconomics, principles of economics, business economics, etc. If the examination, the question comes in the form of explain the law of diminishing marginal utility, it is very important how we are going to present our question, how we are going to present and attempt our question in the examination. If the question is asked, explain the law of diminishing marginal utility, then we have to write in this form: meaning, definition, assumption, explanation, table. Then we have to give the summarized interpretation of the table, summarized interpretation of the graph. Then we have to write the exception. If the question is asked, discuss the law of diminishing marginality, then along with the exception, we have to write the criticism also. Significance we will write only when the question, when the significance is asked question specifically. If it is not asked, then we are not going to give the significance. First of all, we will understand what is utility. Why do we purchase? Why do we consume things? Because the commodities, they have want satisfying power. The concept of utility is subjective. It differs from place to place, time to time, and person to person. Like Ram may be liking Ram is having more utility from the consumption of tea, but Sham is having more utility from the consumption of coffee. So it differs from person to person. Marginal utility means the addition which is made to total utility by consuming one more unit. Marginal utility of n is equal to marginal total utility of n unit minus total utility of n minus 1 unit. Law of diminishing marginality is also called the first law of caution. It's a fundamental law of utility analysis which we experienced in daily life. It explains the relation between the utility and a quantity of a commodity, and it's a psychological fact. When we consume more and more unit of a commodity during a particular time, the utility from the successive units goes on declining, diminishing. Like if you're feeling hungry, definitely you will start eating the food. As you consume more chapatis, the utility derived from successive chapati goes on diminishing. According to Dr. Marshall, the additional benefit which a person derives from a given increase of stock of a thing diminishes with every increase in the stock that he already has. According to Professor Boulding, as a consumer increases the consumption of any one commodity, keeping constant the consumption of all other commodities. Then he goes on the consumption of one commodity, the marginality of that variable commodity must eventually decline. This law is based on these assumptions. Utility can be measured in cardinal numbers. Like if I have tea, I could say I have derived utility from the tea 50 units. And utility can be added, utility can be subtracted. Marginal utility of money remains constant. Marginal utility of every commodity is independent. Like we are consuming X unit, the marginal utility derived from X unit is not going to affect the marginal utility derived from Y unit, Y commodity. Every unit of the commodity being used of the same quality and size. Like if we are consuming apple, it doesn't mean the first apple is sour and the second apple is sweet. Then we are consuming they should be of the same quality and size, then there should be continuous consumption, and there should be suitable and proper quantity of the commodities consumed. Like if we are thirsty, you are not drinking the water by spoon. Here we means one glass full of water we are consuming, one apple, not the bite. No change in the income, fashion, habit, and price of the commodity. The goods and person, they are normal. Goods are divisible. So this is the explanation of the law of diminishing marginal utility. So these are the units of ice cream cups. These are the marginal utility. As we see from this table, as we go on consuming more units of the ice cream, the marginality goes on diminishing. At the fifth unit, it becomes 0, and the sixth unit, it becomes negative. So we will stop at the fifth unit if we want to get the maximum satisfaction. And this tabular information, on the basis of this tabular information, we will draw the graph. So here we take the quantity units of ice cream. Here we take the marginal utility. And we see the marginal utility curve slopes downward. At the fifth unit, it becomes 0. At the sixth unit, it becomes negative. Marginal utility curve slopes downward from the left to right, which indicate as we go on consuming more unit, the marginal utility of each successive units goes on diminishing. At the fifth unit, it becomes 0, and the sixth unit, it becomes negative. As the commodities, they are imperfect substitute, they are not perfect substitute, tend to be consumed because when the goods they are to be consumed in certain appropriate proportion for getting the maximum satisfaction. When this proportion is disturbed, definitely the consumer is not going to get the maximum satisfaction. Satisfaction of particular wants, although all the wants of human being cannot be satisfied, but one particular want is fully satisfied. Fully satisfied. Like if you are feeling hungry, definitely you will be eating food, so that hunger could be satisfied. So particular want can be satisfied fully. And we give top priority to the most important use. Each commodity has many alternatives. Some uses are more important and others are less. Then there is a scarcity. We will use in more important things. So these are the exceptions which say the law of diminishing marginality is not applicable, but we have to tell why this law is applicable. Initial unit, when the initial unit of the commodity are used in very small than appropriate quantity, the marginal utility from the additional unit goes on increasing and the law will not operate. But this exception is also not correct. This assumption is the use of the appropriate quantity and quality. Earlier I said that there should be, when we are consuming, we are thirsty. Definitely as we are consuming the water by spoon, each spoon will give us more satisfaction. But here when we have to apply this law, then it means that we are having one full glass of water. So this exception is not true. Rare and curious things, the law does not apply to rare and curious things like old coins, rare painting, old stamps. As we collect old coins, rare painting, old stamps, the utility goes on increasing. But this exception is also not correct because when a stamp collector, he collect go on the same time. Like I have find the stamp of USA. Again, my friend also gave me some stamps of USA. Definitely the marginality goes on diminishing. Drunkard. This law does not apply to the drunkard. As he takes more alcohol, his desire to have more goes on increasing. But this exception is also not true. A stage comes where he loses his senses and start vomiting. Miser, their desire for money is never satisfiable as they want to have more money. But this exception is also not true because when they are having more money and gold, so their desire for food items also increases. Good book, poem, and music. We want to read good book and poem, music again and again, but this exception is not true because if we're reading one book every time or listening one song every time, the utility derived from goes on decreasing. So this exception is also not true. So the law is criticized because it is based on unrealistic assumption. Measurement of the utility is not possible. Utility is a subjective concept, so it is cannot be measured. Marginality of money does not remain constant as we have less stock of money, so the utility increases. Utility is not relatively independent. It is affected by the consumption of other commodity. It does not specify at what rate marginal utility goes on declining. And fashion, taste, habit, income are not constant. They also change. Marginality of money is not constant. Utility cannot be measured. So this law is very significant. It is the basis of equimarginal utility, law of demand and consumer surplus. A consumer has limited income, so he's not going to spend the income on one commodity to get the maximum satisfaction. He allocate his limited income on different commodities in such a way the last rupee which is spent on different goods give him equal marginal utility so that the utility is maximum. It is also the basis of the law of demand. Law of demand is based on the law of diminishing marginality. More quantity is purchased at low price because marginality of the initial unit become less and less. So he's ready to pay the price where the marginality is equal to the price. So the consumer will be ready to pay less price. It is also the basis of consumer surplus. A consumer purchase as many units of a commodity, the marginal utility which is equal to price. In this way, the consumer obtains some surplus utility from the earlier unit that is known as a consumer surplus. It is also important to the consumer. He should plan his expenditure because if he's going to spend on one thing, definitely he will get saturated. From this law, he learned that he should not purchase more of the same commodity, rather, he should buy more variety. Variety of the production because the producer knows he has to produce, he has to produce many things because if he will producing one thing, the consumer will reach at saturation and he is not going to buy. The law also help in price fixation, and this law also explained the difference in value in use and value in exchange. Diamond water paradox is explained. It was not fully explained by Adam Smith. He so diamond they are not more useful. So why the diamond price is more than the water? Because the utility of water is more than demand. So Adam Smith explained it value in use and value in exchange. Goods having more value command low price, goods having more value in exchange high prices, but he did not explain the reason. New classical economist Jevons explained. According to him, there is abundant supply of water, so we reach the saturation point. So the marginality falls quickly and the price also. That is why we pay less price. On the other hand, diamonds are limited and rare. They have more value in exchange because their marginal utility falls slowly, and that is why they command higher value. And it is also the basis of progressive taxation, which levies high taxes on the person who are having high income, low tax on the low income. Because the person who are rich, they have less marginality of money, that is why they are taxed more. The person who are poor, they have more utility of money, that is why they are taxed less. It is also the basis of redistribution. Wealth is distributed in favor of the poor. The total welfare of the nation will increase.